We've come to the end of another week, and the financial week ended with important signals from the US. The non-farm payrolls report was much better than expected, recording 287 jobs against a forecast of 175,000. The unemployment rate came in at 4.9% against a forecast of 4.8%. This report seems to balance out the very disappointing read for May, when a mere 38,000 jobs were added to the US economy. Friday's job report also put some information in the hand of the traders that could start to forecast the next FOMC monetary policy decision, but it's important to remember that this is only one piece of data that will be taken into account due to the global risks that have been seen, in particular in the UK, the Eurozone, and also we've got Chinese growth data later this week. Now, the week beginning Monday, the 11th of July, opens right after the Japanese elections of the House of Parliament. Prime Minister Shinzo Abe and his coalition government are facing a real test. While Abe and his coalition are likely to keep the majority of seats, it will be interesting to see by how much. The dollar-yen is likely to open with a higher degree of volatility, and in case of new political uncertainties in Japan, we could see the pair slump towards the 100 mark and even the 98.99 support level, which is a June 24th low. Now, looking at the upside, resistance is at 101.39, and above that level the pair could start a recovery up to 103.38 and then 104.35, which is a Fibonacci retracement. We kick off the financial week with the Eurogroup meeting in Brussels, and the agenda of this meeting is set to include economic and financial situation in the euro area, with the Eurogroup likely to exchange data and forecasts on the economic and financial situation, in particular after the UK referendum on its EU membership. Now, in particular, traders could expect the European Commission and the ECB to release comments on market movements. On Tuesday, investors will be waiting for the UK inflation report hearings, where the Bank of England Governor Mark Carney and several MPC members testify on inflation and the economic outlook before Parliament's Treasury Committee. It's a fairly quiet day on Wednesday. The Bank of Canada rate decision takes place, but monetary policy is expected to remain unchanged with an interest rate of 0.5%. Now, on Thursday, Australian employment data for June is released, which could be the first important data ahead of the Reserve Bank of Australia's monetary policy meeting in August. Now, the RBA left rates unchanged in July with a cash rate of 1.75%. The main event for Thursday, however, is going to be the Bank of England monetary policy decision. Now, right now, the official bank rate is at 0.5%, with asset purchases set at $375 billion. Now, traders will be waiting to see if the central bank is going to inject liquidity into the market through quantitative easing or wait for further data before taking any action. The pound dollar in particular could be affected after the last performance. This week, the pound lost almost 20% of its value against the US dollar. Cable could bounce up, and we see the beginning of a recovery once surpassed the 132.90 resistance levels, which could continue up to 134.30. Between Thursday and Friday, we will have important data from China, which is going to publish the second quarter GDP result. In the previous quarter, Chinese growth slowed to 6.7% from 6.8%. Finally, we end the week with final CPI data for the Eurozone, which is expected to be 0.1% better than last month. However, the main focus Friday will be on the afternoon, with several major US data releases, including industrial production, inflation data, and retail sales. Now, all this data will certainly be taken into account by the Federal Reserve ahead of the FOMC meeting at the end of July. That's it for your wrap-up for the week ahead, but tune in next week. In the meantime, have a great weekend. Goodbye.